Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Although it is Thursday, it feels like a Friday since the market is closed tomorrow for Good Friday. So we'll see you back here after today on Monday. Now this morning we'll be taking a look at exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. Don't forget to head over to TipRanks TV to catch some great exclusive content there as well, and say good morning in the comments while you're at it. Now let's get right into this morning's exciting stock market news. U.S. stock futures are currently in the green. Right now, Dow futures are up 0.21%, S&P 500 futures up 0.03%, and NASDAQ futures up 0.07%. Now, the biggest and pretty much only news in the headlines this morning has to do with Elon Musk and Twitter. Of course, last week he revealed an over 9% stake in the company, which was followed by some discussion on whether he would join the board of directors or not. Well, now it's been announced that Elon Musk has offered to buy Twitter for $54.20 per share, valuing the company at $43 billion. According to an SEC filing, Musk has offered to acquire all the shares in Twitter that he does not currently own. He said the cash offer was his best and final offer, according to the filing, adding that if it's not accepted, he would have to reconsider his position as a shareholder. The Tesla CEO sent an offer letter to the company Wednesday night. In the letter, he said, "I invested in Twitter as I believe in its potential to be the platform for free speech around the globe, and I believe free speech is a societal imperative for a functioning democracy. However, since making my investment, I now realize the company will neither thrive nor serve this societal imperative in its current form. Twitter needs to be transformed as a private company." Analysts currently rate the Twitter stock a hold with a slight downside of about 1% after big gains this morning. Beyond that, a lot of eyes are focused on the big banks' earnings reports. So let's head right over to notable earnings reports. In the pre-market this morning, we're still waiting to hear from Goldman Sachs, Morgan Stanley, and Citigroup. We did just hear from Wells Fargo, who did beat their earnings target but fell short on revenue. For earnings, they reported 88 cents per share, ahead of analyst estimates of 80 cents per share. Revenue came in at $17.59 billion versus the $17.8 billion estimated. The bank had set aside $1.1 billion in the first quarter to account for more loan losses. Analysts currently rate their stock a moderate buy with an average upside of 25%. We also heard from Taiwan Semiconductor, who came out with better than expected results for their first quarter. They reported earnings of $1.40 per share compared to expectations of $1.35 on revenue of $17.6 billion, also ahead of the estimated $16.7 billion. Even better is their forecast for the current quarter, as they expect revenues in the 3 months ending in June between $17.6 and $18.2 billion, well ahead of analyst expectations. Analysts currently rate their stock a moderate buy with an average upside of 40%. Now let's take a look at which stocks are this morning's biggest gainers and losers. It's no big surprise that our biggest gainers this morning are led by Twitter following Elon's offer to purchase. Trading under the ticker TWTR, the stock is currently up just shy of 7%. They're followed by the Canadian Bank of Commerce stock under the ticker CM. The stock is up about 6% on no distinct news this morning, but they did announce a 2-for-1 stock split last week. And the Flex stock under the ticker FLEX, they're up 5.7% after releasing their Q4 earnings guidance. Our biggest losers this morning are led by GXO Logistics after they made a $1.3 billion takeover bid on Clipper Logistics. Under the ticker GXO, the stock is down 6.7%. They're followed by the Ericsson stock under the ticker ERIC. They're down 5.4% following their first quarter results. And Northern Oil and Gas, under the ticker NOG, they're down 4.7%, following gains earlier this week, but there was an article this morning saying that they were weighed down by their debt load. So that is everything for Thursday morning's pre-market update, getting you up to speed with what you need to know before that opening bell. A nice and quick one to end off the week. I hope you guys all have a fantastic long weekend. Make sure you head over to TipRanks TV, say good morning in the comments over there. Thank you guys so much for watching, and I'll see you back here next time.